everything going on in the markets right now does not add up to what we see going on in the world, right? China's economy is half of what it was a year ago as far as their gross domestic product. Our economy is slowing down. Europe is slowing down drastically. What is going good? What is going right? What would tell you, looking at the external figures, that this market should be going up?
Well, Tesla's doing well, right?
You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
And welcome. You are listening to and watching the Financial Survival Network. I'm your host, Kerry Lutz. Well, what are we seeing in the market? Is it going to melt up or is it going to melt down? I think everybody is wondering about that. We're close to peak on the Dow. Hey, let's talk with our good friend, Russell Stone. Get your take on things, Russell. It looks like everybody has... a funny thing happened on the way to the recession. Everybody has forgotten that there was going to be a recession. Is this just hopeful, wishful thinking, or have we dodged a bullet here, Russell?
We have not dodged the bullet, not at all. The metrics and the data that people chase after are very highly manipulated. Think about this, right? Back, say, 20, 30 years ago, who was the investor competing against in the marketplace for price? They were competing against pretty much themselves and the performance of the companies that they were buying. But now they're competing against algorithms. They're competing against day traders. They're competing against high-speed computers. They're competing against just fraud, quite honestly, in a lot of areas. So the average investor is looking at a rising market that they have no chance of really been able to be successful unless they guess correctly or if they go long-term and then just cross their fingers and hope for the best. Everything going on in the markets right now does not add up to what we see going on in the world, right? China's economy is half of what it was a year ago as far as their gross domestic product. Our economy is slowing down. Europe is slowing down drastically. What is going good? What is going right? What would tell you, looking at the external figures, that this market should be going up?
Well, Tesla's doing well, right?
Take away 6 stocks out of the Dow or the S&P 500 and the whole thing collapses. Take away 1 or 2 stocks. You take away Tesla, you take away Apple, you take away any of the large 6 major drivers of the NASDAQ and the Dow and the S&P 500, and everybody else is doing negative or flat, all right? There is no impressive. Everybody's chasing after the 6 that are leading the way.
Good. You're sounding downright pessimistic here, but as we're talking, hey, it's the first day of August. We had a nice rally in gold. Gold's down $23 an ounce now. Silver's down half a buck. What do? You put it into metals? I mean, the metals have been strong as of late, but they're not trading at record levels.
Right, and my view on metals is this. I'm not buying metals right now, precious metals, for my own portfolio based on what I think the price is going to do in the next week, 2 weeks, or month, or even 2 months. I'm buying it for the long term. I'm focused on the dollar. What is going to happen to the dollar August 22nd when the BRICS nations get together and decide their next move, right?
Mm-hmm.
Right. If you really think that the dollar's on solid ground, then I would think again. And if you do think the dollar is in jeopardy, that it's being attacked by the BRIC dollar or in other forces, then you really need to prepare for that. And how do you prepare for that? Precious metals, silver over gold, because the ratio is 83-1 right now.
But whatever happened to that saying, sound as a dollar?
Well, when they elevated gold to a tier 1 asset right next to the dollar, that was a clear signal that we better start moving in another direction. The dollar is what? Where does the strength of the dollar come from? Is it because of the gold that backs it?
Well, there is no gold that backs it.
My point.
The fact that it's accepted, it's like your credit card, or your American Express, or your MasterCard. It's accepted worldwide, right?
So, but why is it accepted? Because they have good faith that American Express will pay the bill, right?
Yeah.
When we're $32 trillion in debt, The interest on the debt alone this year is going to exceed $1 trillion, bigger than our military budget. All right. The unfunded liabilities add up to $192 trillion. All right. So where's that faith going? All right. FDIC insurance has 1.2 pennies stored up for every dollar that they're obligated to protect. How much faith should people have in the banking system?
Mm-hmm. I don't know. You're making me feel a little downright pessimistic here, Russell.
Yeah, but look at the end of my notes, Kerry. All right. What does it say? All right. It says buy. But when? A year out, maybe 18 months out, when the market has shed all this excess debt and the world has returned to a normal valuation. Right. The valuation of the stock market was greatly inflated when interest rates were held low and corporations were buying back their own stock with their own money.
Borrowed money. Yeah, at low rates, I guess they can't do that arbitrage anymore. And then that would artificially boost their per share earnings, and therefore the share price would go up, and all sorts of great things happened if you were in management, right?
Correct. And one of the things that people throw out there all the time is that the government just prints money. The government can't just print money. They only can print to the demand through the commercial lending banks. So if the commercial banks are not lending to corporations, they can't print money, right? You go look back at the 3-month and the 6-month trends in the Treasury, the T-bills, right? And you can see last month that the Fed was not going to raise interest rates because the interest rates did not go up. You can see last month, or this current month, when they did raise them, the interest rates started to go up again. The Federal Reserve only follows the market; they don't precede the market. Right. So if you just track the 3 and the 6-month Treasury bills, you will understand what is going to happen at the Fed. They're going to raise interest rates as interest rates continue to climb.
Okay, so you don't see any end in sight for interest rate increases?
It's going to be a series of increases, pauses. But when fear enters the system and the fear of default within the system starts to elevate, you're going to see the VIX start to react to that. And people are going to start to demand a higher interest rate for the risks that they're taking within the bond market and stock market.
So then that's going to result in, I guess, the stock market coming down because you're going to get a higher, quote unquote, risk-free return in the bond and fixed income markets, right?
Yeah, because think about it. If you can get a higher yield by going to quality bonds, individual bonds that pay a higher yield, right? And get a 6, 7, 8% yield. Look at all the people going after government treasury funds that are paying 5% right now. What bank can compete with that?
Mm-hmm. No, they can't. Hey, and we see that the amount of loans they're making is dropping dramatically. Loan standards are higher. And as these regional banks, each one goes under, there's less interest in making wise loans to growing enterprises, which in my mind was the purpose of the banking system in the first place, Russell.
Right, absolutely. I mean, there should have been higher standards. In Canada, you have to put 20% down, and the longest you can finance a house for is 7 and 15 years. Correct me if I'm wrong, but it's no longer than 15. Most of the houses are financed on a 7-year note. Why? You have equity in it. It's less likely that you're going to walk away from the property. People in America can still finance 97% of the properties, right? In a lot of cases, more, right? Doesn't make sense. It just makes it easy for them to walk away. Think about the used car market, right? During COVID, if you qualified for a stimulus check, you could go in there at 24 years old, say, and borrow $30,000 to buy a Mustang or a Camaro, and you wouldn't have to make a payment for 2 years. Mm-hmm. Those payments are now being expected, just like the student loan debt. Do you realize that the largest asset on the U.S. balance sheet is student loan debt? Isn't that crazy? The largest asset is debt that is hamstringing our young people from being able to go out and participate in the economy.
Hey, so what's your thought about housing, Russell? You know, so many of you out there have bought new homes, upgraded whatever over the past 5 years of low interest rates, 3% interest rates. And now, like, I would like to downsize, but it's going to cost me more to downsize than it's costing me to stay where I am.
Yeah, my condolences to those people who bought houses in the last 3 years, because they're in a predicament. They're going to be underwater in no time. Hopefully, you didn't put a lot of money down on the house. But if you're in a position where you put a lot of money down and you need that value to be intact, you've got a tough decision to make. Do I exit out of that house and into a smaller house, or even rent a house for a year or two while the housing prices come down? That is not a bad maneuver. Sell, rent, buy.
Mm-hmm. Yeah, well, then you have to move. You're going to have to move 2 times,
But look at the long term. The biggest mistake that people make is with their real estate. All right. They think that real estate's an investment. It's really just a bad savings account. At the end of the day, unless you're flipping houses for a living. But this is one of those time periods where if the value of the stock market goes down to the percentages that we think it's going to, and the real estate market goes down similar to what it did in 07 to 2010, then you really want to make a tough decision, a bold decision as to what you want to do with your housing. If your kids are on the way to college, you can downsize. I'm going through that right now. My house is going to the market in a few weeks. And when it does, I'm hoping that it will sell at a good price, but also that the sale will get to the closing. Because you got to hope that something doesn't blow up in the world that will stop the banks from freezing those loans and saying no.
Yeah, well, banks will always want a loan on real estate for some reason that I can't understand. But I guess maybe the fact that virtually all of the home loans, certainly in the affordable areas, are basically guaranteed by Uncle Sam.
Yeah, but when the foreclosures start to build up and Uncle Sam is paying you 5% plus not to loan money out in the interbank lending rate, why on earth am I going to go out there and take default risk when I can earn 5% and do nothing? I'll just cut back on my staff and cut down on my expenses and write it out. And when I can buy those houses at rock bottom prices, that's fine.
Well, I think one point you're missing here, Russell, is we're never going to have a foreclosure crisis like we had last time.
Not according to Janet Yellen.
We might have millions of people underwater in their homes, but there's no appetite in this country for millions of foreclosures like we had last time. So just like they've normalized shoplifting and legalized it in a bunch of places around the country, basically you'll stay in your home and they'll do a workout. There's just not going to be these foreclosures again. I'm telling you, politically, the Congress is just not willing to take that hit again.
Yeah, but my problem is that we're kind of at the end of the rope of kicking the can down the road. Where is the government going to get money if the foreign countries are not borrowing our treasury to create their dollars? How's the government going to pay the bills? Because the world lines up to buy oil in our dollars. If OPEC says we no longer require the world just to use dollars, it will allow them to use brick or euro or something else. Guess what? The government's not going to have a whole lot of money to work with. And they're going to have to print money in order to make it happen.
Yeah, well, that's why the debt jubilee is inevitable.
Yeah, it's not, in my opinion, it's not doom and gloom. It's opportunity time, right? Mm-hmm. All this correction is going to recalibrate the value of everything that we see, which is greatly distorted. It's like watching everything with big Coke glasses. Everything's distorted, right? But now all of a sudden we're going to have 20/20 vision when it comes to the asset value of things. And then the investors were going to come back into the market like they did in 1932, and we'll have happier times. Yeah, Cash is king. Cash is king, guys.
Yeah, it's like Warren Buffett said, you don't know who's swimming naked until the tide goes out, right?
Correct, absolutely. Right, unless those people go out with the tide.
So you've given us something to chew over here, Russell. Appreciate you coming on. Best place to find you is scrantonfg.com.
Correct.
All right. And there's a link in the show notes to this interview on financialsurvivalnetwork.com. Just go there, sign up for your free newsletter. Russell, always a pleasure. Thanks so much.
Thank you, Kerry. Good luck. Talk to you later.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.